closing beat, everybody. Happy Friday. How you doing today? Hope your week was good. All was good for you there. This is a quick show that we do. We'll make it quick today for you. It's called The Closing Beat. It's a stock market update show because we're financial advisors here at Jazz Wealth. We just like to keep you updated on how things are going with our customers, as well as those of you that like to join us and watch. We also do classes every Thursday for our customers. Last night we did a class on year-end performance from Thanksgiving to the end of the year, sharing all the different data from previous years and the statistics and odds of all that stuff happening, so our customers know exactly what to expect today. And so far, it's kind of doing what's supposed to happen. Granted, it's just a couple days here, but we'll see what happens going into the end of the year. Thank you so much for checking us out. If you do at Jazz Wealth, if you're thinking about transferring an account from another company like Fidelity or Schwab or somebody, I'm probably not allowed to say their names, but I appreciate that. If you're not getting the help and service that you want over there, or nobody's really helping you, maybe check us out at jazzwealth.com. We're also playing a game, and we've got a winner. We're playing Guess the Dow. Bottom right-hand corner of your screen, you could take a shot. Tell me where you think the Dow is going to close next week on Friday. And if you're the closest, without going over like our winner, Jinwan H, I won't say the last name there, we'll send you a $100 gift card. Jinwan happens to be one of our customers, and so we've already emailed saying we are going to credit your account $100. If you're one of our customers, you have the choice, by the way. We could still send you the gift card, or we could credit your account, and it does not count towards your contributions for any tax year that we do that if you happen to want us to credit one of your IRAs. So congratulations, Jinwan. His guess was 28025.12. That was the closest guess to the Dow today, 28015.06, without going over. So Jinwan's our winner. I love it when a customer wins now. I don't mind sending gift cards to everybody else, but it's kind of nice when one of your customers wins. You know what I mean? If I'm playing favorites there. Hey, and if you are one of our customers and you missed the class or whatever, it's in the dojo for you along with all the other replays as well. Let's talk about the stock market today. 337.27 on the Dow. 28 on the S&P, 85 on the old NASDAQ there. Big spike back to highs here. Honestly, I wouldn't have predicted this. There's no way I would have said we would immediately just run back to highs, but there's the S&P sitting there right at those highs there. You're looking at the S&P on the chart. If we go over to the NASDAQ, there you go. It's also almost back to highs there. And if you look at the Dow almost hitting those highs as well. So all of that first level support that we talked about Tuesday, Wednesday, all really paying off. And for the bulls that played that first support area, whether it was on the stock markets or on the individual sectors, so far that's paying off. So what happened? Well, you've got the unemployment number came out much better than expected. Jobs added in the U.S. here. Very, very tight labor market. I'll share a chart with you real quick because the unemployment rate actually ticked lower, down to 3.5%. Here's the unemployment rate. Just looking over the last year to see, we've been declining. Overall, we're down to not new lows here, but 3.5%. If you happen to zoom out, we'll go as far back as we can here. This is the lowest that we've been since 1969. You got to go back all the way over here to find where we've hit 3.5% in the past. Interestingly, if I put over the top here, so a question that came up in our class last night. If I put over the top, or in the background, sorry, the recessions in the light grays there, last time we hit 3.5%, we weren't there very long before the 1970 recession started, which was January of 1970. So I'm not saying that leads to a recession now. I'm just saying, isn't that kind of interesting? Last time we hit these lows, we went into a bit of a recession. To be fair, you could have said that here, you could have said that here, you could have said that here, you could have said that here. You know what I'm saying? So it's just a reference point. It's not a reason to try to scare you guys or anything. So there you go. Anyways, so a good day in the stock market there. You also had Larry Kudlow came out. He's like the finance advisor there at the White House. He was formerly on CNBC. He came out and said that although we're doing great work with the Chinese trade deal there, President Trump would not be afraid to walk away if the deal wasn't right. He picked a great day to say that, by the way. You don't say that when the markets are moving lower. He knows better. He said it when the markets had a really strong day, very unlikely chance of the markets falling because of his comments. So a well-timed comment there from Mr. Kudlow. Also, overnight in China, they said that they would be, they're taking off tariffs on some of our agriculture products like pork, because they have to. They got a big issue over there. So it was kind of a gimme there for that one. But nonetheless, shows good faith in terms of what they're negotiating. I have no other updates in terms of that. So that came out also helping the markets, at least to start. Before we had the unemployment number, futures were already a little bit higher. You also had consumer credit come out today. So 18.8 $9 billion in new consumer credit added in October. That's compared to $9.5 billion last month. It was pretty much evenly spread. I've shared the chart with you in the past. Maybe we'll do it on Monday, where the consumer credit, where was the credit added? Was it credit cards, student loans? Was it auto loans, home loans? What was it? And it was pretty much spread out. So across the board, basically new credit added because consumers are very confident. We had consumer sentiment numbers come out as well today, all looking pretty good there. So that's the stock market. Very positive day to start the day. Let's go over to our sector breakdown here. To start, you got crude oil. We'll focus on that because that broke to new highs here in the short term. OPEC had their meeting. We talked about this earlier in the week, how oil would be volatile this week, and it was. That gave you a great volatile week, mostly to the upside. OPEC says as a team, they're going to cut 500,000 barrels a day in production, and Saudi Arabia threw in 400,000 barrels as well, so a total of 900,000 barrels per day cut in production. That leads to higher prices of oil, of course. And if you dig into that a little bit, they said March. They're going to do this up until March 2020. So the price of oil a little bit higher on the day. That helps some things like the XOP. I know some of you looking for a bounce on that one. OIH, another one trying to move out of a range towards lows there. The energy ETFs, pretty much across the board, all had good days there. If you're playing oil through an ETF, that also had a good day naturally as well. You've got retail stocks headed back to highs here. Here's the XRT. Very much still sloppy. I'll maintain that comment that there's a lot of sloppy sectors out there. But moving back towards those highs there as well. You had financials in the mix also hitting new highs. That was one of the stronger areas today. Also one of the more popular 52-week highs today. You had a lot of 52-week highs in the financial sector there. So there you go. For the week, you got XLYs, consumer discretionary. That was your biggest mover. You had your biggest range from highs to low in terms of the week's performance. Industrials were second. We'll use the XLI to show that. That had your second biggest range percentage-wise from highs to lows throughout the week. You've got the tech sector, still the most expensive overall and almost hitting those new highs again. And you have the consumer discretionary is the second most expensive if you happen to care about that from a fundamental basis, one of the more expensive areas there. All right, so that's basically the sector breakdown. If you want to look at some of the weaker areas, you're going to have gold. Here's the gold miners, lost about 2.33% on the day. Silver lost 2.33%. Gold down 1% on the day, and bonds also going to be a little bit lower as rates shot higher on the unemployment news there. The idea that the Fed's not really going to have to do a whole lot throughout the rest of the year. So that's your sector breakdown. Let's take a look at some individual stocks. Big Lots gapping higher, 31.58% on the day. This is the fourth time they've gapped higher on earnings. We commented on this yesterday that it's fine that it's been gapping higher on earnings, but there hasn't really been a whole lot of action after that. The company actually says they expect to see in the year 2020, coming up here, they expect to see a return to earnings growth was the actual comments there from the CEO there. They beat on earnings by 2 cents. So we'll see. Guidance was a little lower than expected, but nonetheless, Big Lots with a strong day. That's the biggest gap out of the last four that it's had for earnings there. So pretty cool. Ulta Salons did end up gapping higher today. We talked about this yesterday when they reported earnings. Had a strong day, about 11% on the day. So looking good there. They beat on earnings by 12 cents. Guidance was great, basically as expected there, and revenues came in as expected. So a good gap for them following last quarter's kitchen sink type earnings announcement, which we covered yesterday as well. A couple other stocks. You got Zoom. Zoom hitting new lows here today. Beat on earnings, beat on revenue. Really a good earnings report. However, revenue overall seen slowing. That's a problem at these valuations. So the stock was a little bit, actually it was down about 10% on the day. DocuSign added about 9% on the day, breaking the new highs. A really good performer. It's now up 80% year to date. You can see where we started 2019, so a good performer for most of the year. They just had a great earnings report. I mean, it was really good. They raised guidance for the next quarter, which you'll find investors focus on that because the first quarter is typically their strongest quarter in terms of revenue. So it was good that they raised guidance in what was going to be one of their biggest quarters anyways, so good news there. They also said billings were up 36% and they're making progress on, so I don't know if you have DocuSign, we don't use DocuSign here, but if you've ever used DocuSign, you pretty much know them as the company that you create a document, you put it into DocuSign, you send it to somebody, and that signature counts as an official signature. Well, they're trying to take over the beginning part of that as well. They want you to be able to create the document and send it for signature. They kind of want to be your one-stop shop there. So they said they're making good progress towards that. Investors bought into that. The guidance was really the big focus there. Added 9% on the day and hit new 52-week highs. There you go. CrowdStrike. Well, you're going to want to see that. Yeah, there you go. CrowdStrike up 4% on the, or down 4% on the day. They had good earnings. Everything was really good there. The problem is valuation. 33 times forward sales estimates there. Yeah, so earnings are great, but they really had to be super duper stellar to justify their current price there. Also, is this the one? Lockup expires on Monday for them. This is the one. Yep. So it's a new IPO. The lockup for inside investors is on Monday. So we'll see what happens with that one there. All right. There you go. You got 70.7 of the S&P above the 50-day moving average. Nice bump from yesterday's 66%. If you're interested, the sectors with the most stocks above are going to be healthcare. I'll use XLV just to show you, but those have the most stocks above the 50-day moving average. Thanks to the run that they've had as Miss Elizabeth Warren's popularity has been declining. Healthcare has obviously been doing well. Financials have the second most number of stocks above the 50-day, 79% of them to be exact. And consumer staples, we'll use XLP to show you, breaking out of that range that we talked about the other day. 72% of the stocks in the consumer staple space are above the 50-day moving average. That comes in third place. You could use XLRE or any REIT ETF you want to use. In the real estate space, that's the worst one. The most amount of stocks under their 50-day moving average, and largely it's just because it's pulled back and hasn't really done a whole lot since then. So it's not like you have a lot of stocks under the 50-day by like 5-6% and it's a massive sell-off. They're just barely underneath there, but that'll be the worst performing area of the market in terms of stocks above the 50-day with only 31%. And then energy and utilities tie for second place. Energy has 39%, and well, utilities has 39% as well. So those would be towards the bottom of the list. You've got 12 new 52-week highs today. No, 52 new 52-week highs today. 7 sectors, all but 3 stocks today finished positive. A couple notable names. I mentioned the financials being a standout there. Goldman Sachs was one of them, hit new 52-week highs and kind of breaking out of this range here, at least getting attention for that in the short term. They also may be settling their 1MDB scandal from, feels like 2 years ago now, but I think it was early last year. So that was good news for them. That kind of puts a little black eye behind them. Huntington Bank, H-band is a ticker symbol there, up 2%, also hitting 52-week highs. Bank of America and BlackRock would be the other two hitting new 52-week highs that I just kind of found interesting, moving above some known resistance areas and stuff. So I like to point out anything interesting there that I can. Apple, yesterday we talked about the upgrade there. It was moving back to 52-week highs. Today officially made the 52-week highs, up 2% on the day. And of course, Nike doing well this week. They also got the upgrade. So that hit 52-week highs. Kind of an interesting reversal there. Very sloppy and sort of a weird reversal, but looking good there. And a couple other notables, Boston Scientific, if you were to kind of draw a line and see a problem area that it's had around the 43 mark. Today, very comfortably breaking above that. We'll say 43.50 to be more exact there, but comfortably breaking above that. And notably today, not a whole lot of selling when it got to highs. It's one thing for a stock to break out, but if it starts to fade away throughout the day, that gets investors to go do other stuff. Today, it broke to new highs and it stayed up there. That means everybody was very confident in their purchase and they decided not to take any profits, at least initially here. So we'll see. And then United Rentals, URI is a ticker symbol, new 52-week highs, but also breaking above a choppy range here that it's been in for a little bit. There were no new 52-week lows on the day. Oh, I mentioned Tesla. Tesla got a little bump today, added about 1.6% on the day. Was upgraded at Morgan Stanley. Also, overnight, the Chinese industry ministry said they were going to suggest subsidy allowances for any Teslas made in China. So good news for Tesla in terms of being able to maybe sell more cars, get a little bit of cost back on that respect there. So good for Tesla. Looking good. I like that. I like that guy. You want to cheer him on there. Monday, we have no economic news, so it'll be a quiet start to the week in terms of the economic news. You've got earnings from Casey's General Stores, Chewy, that's the online pet store there, actually a pretty strong company. Stitch Fix, Toll Brothers, going to be reporting as well after the close. You got dividends from Travelers and VF Corp. Travelers paying out 82 cents and VF Corp paying out 48 cents. And remember, next week, we don't need to mention it every day, but next week, Old Dominion is going to take over for SunTrust Bank in the S&P 500. So that adjustment will take place. And the one from yesterday is already done. Nice. Cool, cool. All right, I'll take your questions if you have any, and then we'll call it a week. How about that? Boeing got a little reversal here today after being pretty much beaten down all week. So a nice bounce there for those of you that like to play the counter trend stuff. So not too bad. Yep. Didn't see any question on Tesla, but we did cover it. Hope if you have a question, I'll take my shot at it. Yeah. Ooh, you had some big lots. You took your profits on it. Good play there. Really good play, because that's, you know, that's impressive to do all that in one day. So I like that. I like that. 3M, look at, 3M, yeah, I saw that earlier in the day. Decent day for 3M, up 4.3%. Getting back to basically where it started the week, a little bit better. So week over week, at least posted a little bit of a gain there. But I agree. Anything trade related today got a boost, you know. Trade seeming like it's going to go well there. For the individual account, would you recommend value investing, buying good companies when discounted, or buying the SPY? I'm trying to make a short-term money, so pay off mortgage and then buy the house in 5 years. That's aggressive. Careful there. I know a lot of people have these sort of mid to short-term goals, and they're thinking, I'll invest in the stock market, and I'll make a bunch of money, and then I'll go buy my house or put a down payment on it. Be very careful with that. You don't want to take too much risk there. Last thing you want to see is you're about ready to buy a house and something brief happens in the market. Like last year, October, November, December, you're down 20%. You found the house of your dreams. You can't take the money out and take the loss. I hate to see that with people. So I'd be maybe a little more cautious if I were you. That's just me. You know, I know some people probably want to take more risk than I'm comfortable with, and that's what makes a good market. So it's okay. Cool. So I did get your question there. Perfect. Will Robinhood do an IPO? I don't know. I don't think they've mentioned anything of the sort. You'd also be able to tell a little bit ahead of time, because all of a sudden the CEO will be on TV more. They'd have more of their leadership team out there trying to get some familiarity, face to name sort of thing. Like if I was going to IPO Jazz for some reason, I would go on TV and I'd be on all the things. I'd be talking about retirement investing and, you know, the competitive landscape of the RIA business and all that, so that people saw my face more. Then that way they would know Jazz, 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 Jazz. And when you finally did go public, which is unfortunate, we couldn't use the ticker symbol Jazz because it's taken by a pharmaceutical company. Then people would know the name. So that happens. Uber did that. Everybody does that. So I don't see that with Robinhood, so it leads you to believe that they're not really planning on anything. Yep. There you go. Oh, remember too, yeah, you've got 9 days left to go before the increase in tariffs there on China. So it's sort of a ticking clock to see if they're actually going to delay those or not. That'll be the focus here going forward. Does a date from an aerospace company ever accurate? I'm not sure what you mean by that. Kevin wants to know the best way for short-term investing. That depends on your goal. So I saw your question about buying a house. I don't know that I would do any kind of short-term investing if I was going to buy a house. Worst case, I would do something ultra conservative with the mindset of, well, if I'm going to get 1.5% in a high-interest savings account, maybe I'll take a little risk and shoot for 3%. But you don't want to go diving all in. Like I said, those comments from before, I'd hate to see you try to go put a down payment on a house with a declining portfolio, all just because of the timing of it. That can hurt, and that does happen. Hey, I could do a whole class on horror stories that I've had to watch people go through, and I've tried to help them not do the things that they did, and they don't listen to old Dustin over here, so I try to stay away from them stories, but I could share some nasty ones with you. Can someone invest in stocks with an ITN number? Of course. Yeah. You mean in the U.S. here? Have like a U.S. brokerage account. Yep. When the recession comes, will you tell the rest of us about the signal you told your clients about? I hope I don't have to do that, but could I? Yeah, I mean, I could. I guess I could. You're going on a ski trip for a couple of weeks, and you're wondering what to do with your short-term positions because you won't be around to manage them all day. You take your phone, and then you go, like, while you're going down the slopes, you just kind of check and just press the buttons and make your trades there if you have to. If you have short-term trades, if you're a short-term trader and you're going on vacation, you need to have a plan for that. Because I've been in a position, and I was talking to a client the other day that was in the same position on vacation and needed to make changes, and could not. My story behind that is I wanted to make a change, and I used my phone, and I messed it up, and I ended up buying twice as much and then selling 4 times as much when I went to sell it, ending up net short and not knowing I was short with a very large position that moved against me. So not cool. There you go. Oh, good. So you guys are helping out Kevin. Hopefully we can talk Kevin out of being too aggressive there. I'd feel pretty good about that. Doe isn't taken. That's taken by another company. They're not public yet, but I wouldn't call it Doe. I like that you guys are thinking about us going public, though. I don't know why I would do that, but it would be fun. Get to be on TV and stuff. I don't think Wall Street could handle the hoodie. You know what I mean? They'd be like, "Who's this guy? He thinks he's Mark Zuckerberg." So, any thoughts on the Boeing CEO? See a lot of apologizing with no plan to get planes in. Well, they're working on it. Yeah, I think he will get the boot once this is all done. I don't think Boeing will pull him out of the way, as he's currently the face of getting that 737 MAX back in the air. I think that'd create way too much chaos if they replaced him now. So I think once this is all settled, they may move on to somebody else. I think you'll see the pressure build for them to move on to somebody else, but he's not going anywhere, I think, until the planes are back in the air. So his days are probably limited, but I'll see. Isn't the Spy pretty safe, though? No. Not for saving for the ultra short term. Don't use that. You want to use something slower. Will tariffs affect the financial sector? Yeah, you see the volatility there. Not so much as like the industrials or materials and things like that, but you do see the volatility there because they lead the market. They're one of the market leaders there. So, yeah, I would say yes. Yeah, there you go. Steven's got the idea. Buy like, at the money call options on something super volatile and then hop on a plane with no Wi-Fi. Or better yet, sell puts at the money on a stock that has earnings coming up on the day that you're getting on the plane and sell more than you can afford to. Don't do that. I have to say that. Will you get a dividend only if you buy before they open and sell it before the next day? Depends on the day that... No. I mean, you'd be entitled to it, but then if you sold the stock after X dividend date, you wouldn't get paid the dividend. You'd be entitled to it, though. You'd have to hold the stock. Yep. Cool. Last question, is Teva the right stock to buy? I can't really answer questions like that. We can look at the stock, though. So Teva is coming off the lows a little bit. They've really struggled. They've had a hard time here. It's an Israeli drug company. So Teva's coming up off lows there. Known resistance here, obviously, with the 200-day. Anybody that says that 200-day doesn't have an impact, just getting the wrong information. I think, if anything, if you're looking to buy the stock, you want to see that. I mean, you could tell everybody is not willing to fight this 200-day moving average. Wait until it gets above there and watch the response that you get once it does. Then you may say, okay, I think I'll take a shot there. But is there any reason to dive into it now? Or if you own it, any reason to make any adjustments? I wouldn't think so, in my very humble opinion. All right, well, I think we've covered everything here today. Pretty busy day overall and a pretty busy week. Hopefully that continues into next week, keeps these things exciting, but I'll be back. We'll do this all over again, and I'll just wish you guys a good weekend in the meantime, and we'll see you guys on Monday. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.